Hello guys, and welcome back to the new year 2024 market snippets. This is our first market snippet for the year 2024, and I'm anxious. I can't wait to see whatever the year 2024 gives us in terms of trading. So I believe it's gonna be a promising year. It's gonna be a profitable year. So as long as we put in the effort that is required as a trader, definitely, and we follow the rules of the game, definitely we will realize an edge, or we will be successful. So as is always our norm, we begin by looking at the DXY, that is the dollar index, and I have received some questions. What is the dollar index, and why do we always look at the dollar index when doing market analysis? Personally, I look at the dollar index because I trade, most of the time I trade the major currency pairs. If you don't understand what are the major currency pairs, go to this YouTube channel. You'll see where I have a Forex beginners class. Okay, it's a free class. You can watch from the beginners level all the way to the advanced level. And once you get equipped with these terminologies, you can now be able to understand some of the concepts that we shall be talking about, even as we continue with this syllabus, as we continue with this market analysis. And also remember, this year I am uploading some informational, very informative, educational videos, just dubbing it 2024 YouTube mentorship. So ensure also you watch them. These they'll begin from this week. I'll be trying to post at least 2 videos per week. And now the market snippets, the weekly market snippets. So we will be having at least 3 videos per week. I believe this way, folks, it will help you improve your trading journey. I will hold your hand because I'll be sharing very informative information that will help you improve your trading journey, that will see you turning from a losing trader to a successful trader. The key thing is that whatever you get taught, or whatever I'm going to teach you, you put it into practice. Okay, you put it into practice. And if you have any questions, you can always reach out to me, and I will definitely try to help you out. So without wasting much time, because I want to make this video as short as possible, so we begin looking at the DXY. This is the monthly time frame. We begin by identifying the key levels, major key levels. So that is a key level, and also on the downside, this is a key level. Remember, this level here, it's what pushed the price up to this level. And the reason why to push the price up all the way to this level, it's because we had some equal lows at this level. So once these equal lows were taken out, or once this sell side liquidity was taken out, so the market pushed up all the way to this level. We shall be talking about this in my YouTube mentorship this year. I'll be talking about liquidity grab, and all those kind of stuff. So don't worry about that. Okay. So now we have these levels that we have identified from the monthly time frame. We narrow down now to the weekly time frame. And from the weekly time frame, this is what we have from the weekly time frame. This is the levels that you have marked from the daily, from the monthly. So we can try to adjust exactly. So we can still work with these levels. But again, we have a very key level here. So we have this key level here. So you can mark that. We use a different, maybe a different coloring, a different color. So showing that this is from the weekly. So we have 2 points of interest. Number one, we have this area of interest here. That is the supply, the weekly supply area. And also we have a weekly supply area at this level. Okay. And as you can see, during the NFP, the price came all the way to this weekly supply area, and the price started pushing on the downside. Okay. So once we have this kind of scenario, number one, these both supply zones, they have high probability. The reason why, because once you want to identify a high probability supply zone, there are key areas that we look at, and we shall be discussing about those key areas. They are not meant for this video, but for this is basically for you to know that this is a supply area, this is a supply area. So there are key levels that also we need to have a keen interest at, okay, when analyzing or when doing the analysis. So on the upside, from the weekly time frame, I want to have this level, and also I want to look at this level. So the price can push to up the way to this level, and it can also push on the downside to this level. So if the price pushes up all the way to this level and breaks above it, then there are higher chances that the price will attack the next level, which is around 107.387. On the downside, if the price comes all the way to this level and breaks above below it, then we see the next level is 99.601. Okay, so we wait to see which direction the price moves. But from this scenario, looking at it from the weekly time frame, we can be able to try and anticipate probably what we are looking at for next week by doing what we call the weekly bias. We have some things that we look at in order to identify the weekly bias, and this one I teach in my mentorship, private mentorship group, because there are some always, folks, you know, I cannot dilute everything, give everything for free, but I promise that whatever I'll be sharing in this 2024 mentorship, it will be quite informative information. But again, it is not everything that I'll be pouring from my heart, because this is basically free information to help you guys. Okay, so from this, the chances are that maybe the price might try to push all the way maybe to this level. It might try to push all the way to this level. Then because this is from my weekly bias that I can look at from the weekly bias, it can maybe push to this level before trying to come down. There are also chances, slight chances, that the price might push downwards to this level and then maybe to this other level. Okay, so but the inner details on the weekly, how to identify the weekly bias, that one we talk in the mentorship. So this is the daily overview of the DXY. Okay, so this daily overview of DXY, from this daily overview, you can see how the daily candle closed, more of a doji candle. So with this one, again, this level becomes very important. The reason why the price reached that level, okay, you can see from the weekly time frame, we add a supply area, and from the daily time frame, this is what we have. Okay, from the daily time frame, this is very, very, very essential, very important. Okay, so from the daily time frame, this is what we add. Okay, what we call a fair value gap, right? So the price reached there and then it tried to push downwards. Okay, so here it is creating series of lower lows and lower highs, series of lower lows and lower highs. And now trying to look at it keenly, this was the last high, the previous high that the price made before pushing all the way down here. And then now the price is trying to break through this. So we still not yet have experienced a break of structure. So the chances is that the market might try to push downwards. That is from the daily bias. The price might try to push downwards first before then seeing an upward movement. Okay, or the market might open. Then after it opens, we see a candle, the daily candle of Monday. If it is able to close to close strongly above this area, then we have a change of structure. And then what we want to witness, maybe the market might push up slightly, then retracement for the retest of the breakout, and then we see a reversal. That is the continuation of the up movement. Okay, so from the 4-hour time frame, this is what we have from the 4-hour time frame. So you can see from the 4-hour time frame, we can see, let me delete this. So this was the daily area where we are saying that if the market closes above that point from the daily time frame, we will have what we call a change of character. So from the daily time frame, this was the previous high point that the price made before creating this low. So we have a change of character from the daily time frame. So we are in an uptrend. Okay, we are in an uptrend, and the market pushed up and came back to retest this area. You can see, but what we have here again, this was the lowest, this was the highest point that the price made. So this again is the lowest point that the price made before the breakout. So this was an uptrend, but now there's another change of structure here, which makes it now to be a downtrend. Okay, so here we can say that we're in a downtrend, and the market might reverse all the way to this level. Okay, the market might reverse all the way to that level before we see actually all this is an area, before we see maybe a downward movement. Okay, before we see a downward movement. So we look at maybe 1 hour time frame, what we have from the 1 hour time frame. So from the 1 hour time frame, you can see this was the previous day's low. So from the 1 hour time frame, we don't even need to identify the choke. You can see the choke is here. The market has been pushing up a series of higher highs and higher lows, and you can see at this level we have the previous daily low that was taken out. So after taking out this previous daily low, the market pushed up. Okay, so after pushing up, this is what the market closed at, because this push downwards was due to the NFP. So the market pushed up the retracement from the NFP, and then probably it might reach at this level, and then we see the move on the downside. Okay, we see the move on the downside. So from the monthly time frame, guided from the monthly time frame, I am more of bearish with the DXY. I'm more of bearish with the DXY. Okay, so we look at the next pair. Basically, we look at the next pair, GBP Euro USD. I mean Euro USD. So we begin from the monthly time frame. So the key thing is to look at the major key points. Okay, the major key points that the price might try to attack. So these are the major key points from the monthly time frame. Okay, from the monthly time frame, these are major key points. Then we go to the weekly time frame. So from the monthly time frame, here we can say that we are bullish. Okay, we are bullish for Euro USD. The reason why we are bullish, it's because this is the previous high that the market made here before creating this low. So once we had that breakout, that is the change of character, and now this is the retest, and then the price is trying to push up. So the next likely level that the price might reach, or the price will attack on the monthly time frame, is this level that we have drawn here. And then once that level is violated, we shall be looking at that, maybe the next level. On the downside, this is the level that we are looking at, and then the other level is around this point. Okay, so but we said from the monthly time frame we are bullish, right? So we go to the weekly time frame, and again from the weekly time frame we can see the bullishness here. There was the break of structure, the market pushed all the way up, series of higher highs and higher lows, but again at this level we can experience, we had this a major level that the market broke. Okay, so these are major level that see the price pushed all the way to this level, but it was broken here, but the market pushed up again with that retracement, because these like I said, these are imbalances. So the market has to fill these imbalances. The market has to fill these imbalances. Okay, so from that point we can see the next level that we will be looking at. We want to look at this level here, and also this level that is, I said, that's the level you're looking at even from the monthly time frame. So the price might push up, maybe, probably, and then attack this level. Once it attacks this level, we might see the price try to push downwards. There might be that retracement on the downside. Remember, this is a weekly time frame, so huge volume or huge amount of pips we can find from this level. So see, that's around 195 pips. On the downside, it's around 217 pips. Okay. So this level, you can see the market reached to this area and started to retrace. So as long as the market, as long as the market is able to break above this point, okay, so we can say that the trend has changed. Now we are in the downtrend. Okay, so this is basically a mini a structure, an internal structure within the monthly structure. Okay, so let's look at the daily structure or the daily market overview. So from the daily market, you can see the uptrend. You can see it's still an uptrend. So it's rhyming with the monthly, the weekly, and now the daily. So it's still an uptrend. So what we want to see at this level, if the price is not able to close strongly above this point, the price is not able to close strongly above this point, then we still remain in the uptrend. Okay, we still remain in the uptrend. So we go down to the 4-hour time frame. 4-hour time frame. So from the 4-hour time frame, we were in an uptrend. So this is just a retracement. So this is a trend, a 4-hour trend, which is a retracement from the higher time frames. Okay. So from this, once we look at it from this level, what we have, so seeing this is a retracement from the weekly, from the higher time frame, that is the daily, monthly, and weekly. So you can see this retracement. What we want to see at this level, there are different scenarios that you can be able to identify from this market. So number one, if the market is able to close strongly above this point, which it did not, then we can say that there was no break of structure. But if the body of the candle was able to close above this point, then we can say we have a change of market structure. So right now, what the price might try to form at this level, because remember, each scenario is possible. So what we are seeing here is this movement. Okay, what you are seeing there is this kind of movement. I will rectify that. So the price can push all the way down to this level. Okay, all the way down to this level. So what I was saying is, you can see here is trying to create like an head and shoulder pattern. Okay, like an head and shoulder pattern. So head and shoulder pattern. So we might see the price respect the head and shoulder pattern and push all the way down to this level where the price had originated from. Okay, this level, attacking these low points here. So in case that happens, this will be our first target, and then this will be our ultimate target on the downside before we start looking on another trading opportunity. Okay, so on the 1-hour time frame, this is what we have. It's a downtrend on the 1-hour time frame. So this was the previous high level. Okay, so this was the high level that the market pushed to this lowest level here. So here from the 1-hour time frame, we already have a break of structure on the upside. Okay, so we can say that now we are looking for bearish bullish movement. So after breaking this structure here, we always anticipate a retracement, and probably we can try to use the Fibonacci. We see up to what level that the price is likely maybe to push. So we can take maybe up to that, and then up to the body. So we might see the price push between these points here, this either 0.61, 0.705, or 0.79 level. Okay, and then it will start pushing on the upside. Okay, so on the upside, if it starts pushing on the upside using these Fibonacci levels, so these will be our first point of interest. This will be our first take profit, then the second, and then we have the third take profit at that level, and the fourth here, which actually rhymes almost close to these high points at this area. Okay, so we quickly look at GBP USD. This was Euro USD. We look at GBP USD. So we begin from the monthly time frame, and from the monthly time frame, guys, this is what we have from the monthly time frame. It's an uptrend. The previous high, the low here, So the price has already broken that. So there was the retracement on the upside. So on the monthly time frame, the key level that we are looking for the price to reach on the upside, it is that is the first key level. On the downside, the key level is this in case the price becomes bearish. So this is the level that we shall be looking at. So we go to the weekly time frame. And from the weekly time frame, we are still working with the same levels from the daily or from the monthly time frame. So like you can see, so the price is still pushing on the upside, so it might attack these levels here. So on the daily time frame, good bullish move. You can see higher highs and higher lows, lower lows, higher highs and lower and higher lows. So you can see that move. We can be able to see that very clearly. Okay, you can be able to see the price respecting that trend line very clearly. So the next level that we shall be looking here now, we will be waiting to see the price flip that level. On the downside, maybe the other level we shall be looking on the downside is along that point. Okay, so from where the price is the daily time frame. So to this level, it's close to 107 pips. Downwards here, it's close to 104 pips. Okay, so this is the daily time frame. So if it continues from this level, you can see from this level here to this level, this was the push up. So this was the lowest level that the price made at this point. This lowest level here. So it creates like still the structure did not change because the candlestick did not close below. The body of the candlestick did not close below this point. So we still have the upward directional bias. Okay, so from the daily time frame, the bias is bullish. So from the weekly, from the 4-hour time frame, you can also see from the 4-hour time frame, the price did not cross below that, but we have series of equal lows. These are equal. This is a low. Actually, when you push below this point, you can see these are like all equal lows resting here. So this is what we call sell side liquidity. Okay, this is sell side liquidity. And above this point also, the next level we shall be looking at is this level. Also, we have close. These are lows that are close to each other. So this is what we call buy side liquidities. Buy side liquidities. Okay, that is BSL. Or this one is what we call sell side liquidities. That is sell side liquidity, SSL. Okay, so the price tends to take out this liquidity. So from here, the question is, which is the maybe the likely point that the price might move to take the liquidities? Is it the buy side liquidity or the sell side liquidity? Okay, so that is the key question that we need to ask ourselves, or that is the key question that you need to ask yourself as a trader. Okay, so to answer this question, you are answered from the monthly time frame, the weekly time frame, and the daily time frame, which is the directional bias. Okay, so those are the key levels that we shall be looking at. So you can see this is a buy candle. There was a retracement here for the 4-hour time frame. The candle closed in that manner. So we might anticipate the price to push up, take out these liquidities, then before pushing downwards, all with the retracement, and also maybe probably continue going up. So either scenario is possible in the market. So we always take what the market gives us. Remember, as traders, we work with probabilities. Okay, we work with probabilities. So from this, you can see we have an uptrend here. We have an uptrend, trending market. It took out the lows, the highs of the previous day, and then there was a retracement. Then it also took out the highs of this other day here, and then this candle, there was the retracement. So we might see the price using our Fibonacci level. So the price can drop all the way to these areas: 0.618, 0.70, 0.79 level, these three levels here. Okay, this is the region that I'm talking about. So the price, we anticipate the price to move all the way to this level on the 1-hour time frame before we think of buying the market. Okay, if we buy from these levels, then it means that we will have our stop loss maybe slightly below these levels. Okay, slightly below these equal lows. Okay, slightly below those equal lows. So That's what we have. Okay, that's what we have, and that's what we are looking at. So once the market opens, we will see which direction the market goes in. Okay, so remember, like I said, trader's mind, you think in probabilities, and therefore you take what the market gives you. So thank you so much, and I wish you a very blue week. Let's interact in the Telegram channel for more insights.